Thursday, August 8th, 2019, Maneco 64, home of alternative economics and contrarian views. So another very volatile day yesterday in the markets. For me, one of the most important moves was the move in yields, 10-year yields, treasury yields. I think the 10-year dropped even below 160 to a 159 level. I think also German government bonds, the 10-year dropped to almost minus 60 basis points. So that's a race to the bottom. Aside from the New Zealand central bank, there were other central banks who cut rates. I think India, I'm not sure which other one cut rates. It wasn't a major central bank, but it just goes to show, I think, that there's a rush to zero rates, rush to QE. And I heard Lynette Zhang talk the other day. My wife was listening to her, and she said zero rates or very low rates are not going to help this time around because people have borrowed already up to here. And she's right. I think it's like taking a horse to the water and trying to make the horse drink. I don't think it will happen this time. All the debt, the massive credit bubble has been created already in the last 10, 11 years. So zero rates, negative rates, it's not going to help. So the other thing I wanted to talk about, yesterday I watched Bloomberg TV and CNBC, which we have here in where I'm staying. And to be honest, I haven't watched that in years. I try not to watch it, but it's quite interesting watching it. How they talk about gold. They only look at the GLD or ETF. They talk about it only as a safe haven, but they don't talk about the fact that it's, and this is what I want to talk about in this video, the fact that in a world where you need to devalue currencies, especially in the fiat system where the dollar is in charge, the reserve currency, you can't do it by devaluing against the dollar because then the Americans are going to try to devalue as well. So it's a useless exercise. In a fiat money system, the only way to devalue a major currency in the whole system is to devalue against tangible goods. And gold and silver are the premier arbiters of value, tangible value. They have been for thousands of years, and that's what's happening in my opinion. That's why gold broke out to above 1,500. We got to 1,510 in the spot price. I know the December future, which CNBC and Bloomberg follow, there's a premium. It went higher, but I look at the spot. Silver was very encouraging. Of course, silver was up more than 4%. So. And I'm going to talk a little bit about the gold-silver ratio. And I've said many times in the past that for us to have a precious metals bull market, we need silver to lead the way. So this is encouraging. Of course, this is only a one-day move. It doesn't make a trend, but it's encouraging. So yes, I think that's what's going on with the precious metals. If you remember back in the early 30s during the Depression, they confiscated the gold in 33, and then in January of 34, Roosevelt devalued the dollar from $20.67 an ounce to $35. That was to try to inflate the system away. There's too much debt that was unpayable. That's what definition of a deflation is. So I think that's what they're going to try to do right now, because for every country to try to devalue against the dollar, it's not going to work. It's a useless exercise. They can devalue against gold and other hard assets. I think that could work. So that's the only way. Why didn't they do that in 08, 09? Well, because by giving gold so much importance, the central bankers, in my opinion, give up their power, and so do the politicians. Because gold is the money of the market. Gold you can't print out of thin air to spend it. So this is it would be kind of their last weapon if they want to keep some semblance of control. So, and I think that's why the price of gold and silver are rising. We saw yesterday, I mean, XAU GBP, which is gold in pounds, went up to above 1240. So we're way past the previous high of 1194. We're making new highs in all other kinds of currencies: Canadian dollar, Australian dollar, Kiwi dollar. So it's only a matter of time that we'll make a new high against the US dollar. I know it's far away, but it's only a matter of time. I think they're all sinking, as I've always said, the fiat currencies against the precious metals. So what about, let's have a look at what the markets are doing right now. So it's 7 o'clock Swiss time. Have a bit of a coffee here. 7 o'clock Swiss time, that's 6 a.m. London, so 1 a.m. Eastern time, spot gold. And that was encouraging, even though the stock market yesterday was down about almost 600 points during the day. It recovered and only finished down 50, I think, the Dow. Even though we had that gold held around 1500. This morning we were at 1500.8, so just around 1500. That's down about 40 cents. Range has been 1491 to 1507. If you look back at the chart of gold going back years, like after the top in 2011, there's a key support around 1520, 1525. That will be now resistance above. Silver is still doing well. We're at 1715, up 5 cents or 1/3%. The Dow is up 61, 26,043. S&P 500 is up 8 points or 1/4% as well, 2892. NASDAQ is up 0.5% or 35 points. That's the 100 future, 7588. I think the markets are, I think there was some comments from Evans of the Chicago Fed about rates yesterday, that he said if financial conditions continue to deteriorate, we could have more cuts. By financial conditions, I think he says if the stock market keeps dropping, right? That's what I think he means. As I said, I think this is not going to work this time. I think the stock market, this is just a counter trend rally in the downward leg right now, in my opinion. Currencies, excuse me, sterling is up a little bit, 0.16%. We're at 121.62. The euro is at 112.08. Dollar is down 0.1% against the yen, 106.15. Dollar is down 0.2 versus the yuan at 607. Saw that dollar index is continuing to do fairly well. It dropped yesterday, but it still has a 97 handle. And in spite of that, gold is still really strong. So this is more of a, yes, a weaker dollar does help gold somewhat, but this is different. This is gold going up against every fiat currency, and they're just going to take turns against gold. Sometimes some are going to underperform against gold, and others are going to perform a little better. They're all sinking in, but they're sinking at different rates, and that includes all of them, even the US dollar or the Federal Reserve notes. What about oil? Oil is up a little bit. Actually, it's up 3% now, so it's still very volatile. WTI is at 52.60. Brent is 57.80. Bond markets, as I said yesterday, yields dropped quite sharply. I saw there was a 10-year note auction that didn't go very well, and yields spiked back up. But I also think it's because the stock market rallied that yields went back up. This morning, the 10-year yield is up 4 basis points at 173. I mean, yesterday we got below 160. So that's the other problem with the markets. They're so volatile that it can cause accidents. And why do I say that? Well, because there's a lot of leverage out there. People leverage themselves so much, and you get these sharp intraday moves. It's not good. We're gonna see. I bet we might see some news very soon about funds or banks having trouble because of all this volatility. Don't be surprised. 3-month yield is at 203. So we're about 30 basis points inverted. Yesterday it inverted a lot more. And I think listening to Bloomberg and CNBC, the people that they have speaking in these programs, they're trying to sell the stock market. They're trying to sell investing to people. So I don't think they look at the bigger picture. They don't look at the fact. They don't look back 10, 11 years ago at QE and the zero rates. And that this time there's no ammunition left, like Lynette Zhang said. It's not going to work this time because people have taken all of that they can. Even the corporations, probably they won't be able to do too much buyback anymore, which has driven stock prices. So that's where I think we are. And yeah, gold and silver, hold on to your gold and silver. If you're trading, that's a different story. It's going to be volatile. But if you hold it as protections, as savings, as I have been doing for over a decade, you just try to accumulate when you can. It's not every month that I can accumulate gold and silvers. It's becoming harder and harder as our national currencies are losing more and more value. I mean, look at the pound. 2002, I only needed 50 pounds to buy a sovereign. Now I need about 300 almost pounds to buy a sovereign. So it's getting harder and harder to save. Silver is still, how can I say, good value. And I'm looking here at the gold-silver ratio before I finish. And the recent high, of course, has been around 93.5, which is massively, I thought a year ago 80 was a resistance, but beginning of July we went to 93 and we dropped quite a bit recently down to around 85.5. We rebounded recently in the last week or so back to almost 90, and yesterday we had a massive drop in that ratio from just below 90 to where we are now around 87. So the key level now is 85.5. Be interesting to see if silver continues to outperform today and tomorrow. If it does and we break 85.5, I think that's a good sign. So that's it for now. I'm still in Switzerland, as you can see. We're leaving tomorrow night, so I'll probably, my next video in the UK or in London will be on Saturday or Sunday, hopefully Saturday evening. Weather here isn't great. It rained a lot yesterday, but today is supposed to be very nice. It's still quite chilly here early on. It's about 13 degrees Celsius, but it's gonna get warmer today. So there you go. If you enjoyed this video, make sure you hit the like button. Subscribe to the channel if you haven't yet, and you can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.